Have you ever been in a trade and you don't know where to take profit? Well, I have too, and I quickly learned that taking profit is almost actually harder than the entry. So in this video, I'm going to be explaining kind of where I take profit. Two main areas, I would say. The first time I look at the charts and look for a entry, I always make sure there's an obvious target, right? There may be a lot of entries like fair value gaps, like this one right here, but there's not going to be a lot of obvious targets. So I'm always scanning for one, okay, equal highs and equal lows. And I'm always scanning for two, data highs and data lows. Okay. Other than that, I think the basic three would be previous day high and previous day low. Okay. But the first two are what I really scan for when I wake up in the morning. So when I'm really looking for a setup, okay, I'm making sure before I get in the setup, there's going to be an obvious take profit, whether it be data highs, data lows, or equal highs, equal lows. So for example, right, when I take this inversion fair value gap, right, I see the bearish fair value gap break, I see the body close above. I'm not going to take it unless I think there's an obvious target. And to be honest, I would say this is obvious enough. Okay, kind of looks like a double top, kind of looks like a supply zone. Right, so that's where I'm going to target. Okay, versus in this example here, when I'm taking this inversion, I don't really consider this like an obvious. I mean, it's just kind of the swing high. It's not obvious. It's just not as good as it is this one, because this one kind of has a more obvious target. It's kind of farther away from the entry versus this one is closer to the entry. In this example, I'd use this more than I would use something like this. So today we kind of had a nice inversion on the 5 minute from right here. Okay, but where do you target? Well, I'm looking for some like smooth highs or smooth lows. So before taking this trade and seeing this, I'm like, okay, if we did trigger this 5 minute inversion, right? If we do close above it, is there an obvious target? And to me, I would say, yeah. I mean, I would say these are pretty smooth highs. I would say that would be a good target. So ahead of time, I already see there's a good target, making the entry for this easy, because if I'm entering this, but I don't really know where to target, I wouldn't enter this probably. And to me, these look smooth. So I'd be like, okay, I'm going to enter. That would be my TP, right? They look obvious enough. As you all know, I only use inverse fair value gaps. And recently I made a full free PDF of inverse fair value gap rating setups that I use to rate my own setups A through C. So if you want to check that out, just click the first link in the description. It's completely free and hopefully should help you. In this example, we got lower down here. Let's say I'm trying to long this fair value gap. Right? I have to ask myself, is there an obvious target? Is there a smooth high, smooth lows, or maybe a high inside of a fair value gap, for example? Okay, like you got to realize when we sell off here, what causes this rejection? Well, sellers do, right? We got algorithm selling here, right? And where do they place their stop losses? Above where they short. And we know people short in this fair value gap, meaning there's going to be stop loss up here. So I'm thinking, okay, I'm going to enter the fair value gap and target the high where people probably have their stop losses. So it could be that as an example, right? It could be equal highs as an example. So in this example right here, we got a short, right? We closed underneath this inversion gap, and I would say there was a relatively nice target here. Okay, I would say there's equal lows here, and you can actually see we didn't close below it. But for the people wondering why I'm saying we did, it's because this is actually the wrong contract. NQM 2024, we did close beneath it, but there was a nice target, right? We had triple equal lows, right? If these triple equal lows weren't here, I probably would not have taken this, because I wouldn't have been as confident as he's hitting as there were equal lows here. In this example here, this is an example on NQ where we get a 15-minute fair value gap, enter the 15-minute gap. So where would the first target be? Well, where do stop losses rest? Well, on the sell side of the curve here, people probably shorted this fair value gap. That's what caused price to go down. So my first target's naturally going to be where people shorted on the other side of the curve before we actually ran stop losses lower. So I'm going to target this high because I know old people probably would have shorted there, meaning their stop loss is above there. And you can see it's just beautifully ran. So those are the three main take profits I like to take. I talk about this more a lot in my course. This is only a simplified video. And if you want to check that out, make sure to click the link in the description. And also don't forget to use code DODGY for 80% off. Prop firm account, again, very, very beneficial. I've gone over multiple videos in my bootcamp going over that. And yeah, just overall good practice, better than demo in my opinion, because obviously demo you're gonna have no emotions. But yeah, so that's gonna be it for this video. I'll see you guys in the next one. Peace.